Hi, this is Dan Stewart, and this is your NORAM Asset Management Market Update, Friday, August 27th, 2010. It's about 2 o'clock Central Standard Time. We have about an hour left in the trading day. The markets opened up somewhat uneventful. Then right as Bernanke came out to speak, they sold off. But after about 30 minutes, they had a big, strong move to the upside. What he said seemed to allay fears. However, when I read his statements, they scare me. The Dow was up 145 points, the S&P was up 15, and the NASDAQ was up 31. They're all roughly up about 1.4 to 1.5%. Gold was up $1.40 to $12.35 the ounce. Silver was up 8 cents to $19.06. And oil was up $1.81 to $75.17. Oil was up big today, up 2.5%. Yields on the Treasury front, yields were up and prices were down. Either people are worried about inflation because Bernanke was talking about more stimulus if necessary, or money was simply coming out of bonds and into stocks. People were taking a little more risk. 5-year treasuries are yielding 1.5%, 10-year 2.65%, and 30-year 3.7%. On the currency front, the US dollar was down against the euro, but up against the pound and the yen, which helped the Japanese market. Over in Europe, Europe was up across the board, but not too much. It was up between 0.5% and just under 1% in virtually all the major indices over there. Spain was the only one that broke over 1%, and it was up 1.5%. Our U.S. better than expected GDP numbers, after they were managed downward, and Bernanke's comments about strongly resisting deflation spurred the European market. Asia was mixed, however. The emerging markets in Asia were down, and the developed countries were up. Indonesia and India were both down roughly 1.33%. Shanghai and Singapore were up 0.33%, and Japan was up roughly 1%, again on the sliding yen. Yen goes down, Japanese market goes up. Yen goes up, Japanese market goes down. But more importantly, folks, I want you guys to think. GDP came out better than expected at 1.6. The estimates were between 1.3 and 1.4. However, those were only the estimates for the past 2 to 3 weeks. The original estimates were at 2.4%. Then they realized about a month ago they weren't going to clear that hurdle, and they were afraid people would start running for the exits. So just like the companies managing their corporate earnings and getting the analyst to come in with lowball estimates so that the companies can then come out and beat estimates, that's exactly what our government's doing. Don't be fooled by Bernanke's head fake. This is a little Bernanke mini rally, and personally, I think it's very dangerous. This has been Dan Stewart for your NORAM Asset Management Market Update, Friday, August 27th, 2010.